Let's go live now to the Chief Economist at Barrenjoey, Joe Masters. Joe, thanks for your time. What are the possibilities now, the prospects for a soft landing, given how difficult things look over coming months and the quarters ahead? What's your read?
Every time we raise rates, and particularly when we know that we're in restrictive policy, that narrow path becomes narrower and the prospect of that soft landing becomes much harder. I think with yesterday's rate hike and also just the very hawkish tone coming from the RBA, our expectation now that there are further rate hikes to come, then we will expect a weaker economic outlook and a higher unemployment rate than we would have had otherwise. I think there's a sort of 60% odd chance of a technical recession. We do think the unemployment rate will move back up toward 5% and even perhaps a little bit above that.
So that's the technical recession. I guess already we're in the first part of a per capita recession, given the high migration rate that we've seen.
Yes, Australia has a long history of having strong population growth that has helped shield our economy. We actually had a per capita recession in 2019, led again by the household sector and the housing activity. So that'll give you a sense of what that can feel like. Population growth provides an important offset to that and does cushion the economy. I think one thing that's really different this time around is that we're starting with an unemployment rate that is so low. And also we know that when we cut rates, we can stimulate the economy. So we're not expecting a deep, very protracted, very scarring recession like we saw in the 1980s, for example.
So maybe a short, sharp recession is what we need. Do you think that there are signs that inflation has peaked? I know we saw that monthly number last week. The Treasurer, when I spoke to him earlier in the program, is confident, though, that we have seen the worst of it.
I think we've seen the peak in measured headline inflation, but there's a lot of detail underneath that. Now, one of the things we're seeing at the moment, and Governor Lowe alluded to this and talked to it, is that inflation is being driven by the price of services rather than goods. And why that's important is because the price of services are determined domestically and they're largely related to wage growth and actually particularly unit labour costs. And there we're seeing very rapid increases in unit labour costs. Today's GDP data showed the fastest annual rate of unit labour costs since we've seen inflation targeting. So that means that it's going to be harder to get inflation down. It doesn't mean it's not peaked, but to get all the way back down to 2.5%, which is the midpoint of the RBA's targets, a big job.
Indeed. And so that comes to this central debate about wages increases. We saw the minimum wage increase of last week. The RBA governor saying the risk is if this spreads across the labour market. The Treasurer really not buying into that, though. He's saying that we need to be careful not to blame the workers. So we've got this situation where the economics is butting up against the politics, Joe Masters.
Yeah, I'm not sure how helpful it is to play the blame game. What we're seeing, I mean, we want Australians to have an improved standard of living, and that means that real wages rise. And the easiest and the most efficient way to get that, or the most sustainable way, is through productivity growth. So it's not about working more or less, it's about generating more output for the amount of work that we do. Now, what we've got at the moment is wage growths are rising, and the governor's concern is that because the unemployment rate is so low, the labour market is so tight, that outsized increase that we got for the most vulnerable and lowest paid Australians morphs right across the economy. And that means that inflation remains too high for too long. And then you risk that circular wage price spiral, which we know from the 1970s is just so dangerous and damaging.
The Treasurer, again, defends the budget and the parameters that he put forward in terms of his second budget. The Governor says it was broadly neutral. The Treasurer makes the argument, though, in the first year, it is putting downward pressure on inflation. Broadly neutral over the 4 years is the way he characterises it. Either way, is there enough being done in terms of fiscal policy?
So fiscal policy isn't necessarily making things worse. Those measures like direct electricity support will help reduce measured inflation in the next 12 months. It's really that longer term over the 4 years that matters. We would agree with the RBA's assessment that the budget is broadly neutral, but monetary policy is working really, really hard. So it would be helpful if fiscal policy could do a little bit more. But as you know, the budget's not just about the economics and the cycle and inflation targeting. It has many objectives, many of which are distributional and social.
Exactly. It's more than just an economic document. And in terms of the rate moves, would you expect another hike next month, as soon as next month?
Yes, so we think that messaging from the RBA has been very clear, that they now see upside risk. Their forecast is for inflation back in the band by mid-2025, but it appears that they want to become very confident in that. So we think there are rate hikes coming, most likely in July or August. To be honest, calling meeting to meeting has been a little bit difficult of late. And certainly if the data softens, particularly the inflation data, then we may not get that. But our base case at the moment is for 2 more 25 basis point rate hikes in coming months.
And just finally, on the productivity question, that was down for this quarter. What's the key to turning that around?
So I think we need to be careful not to get too caught up in quarter-to-quarter movements. It's hard to measure and very volatile. Look, there's a whole range of things around productivity. We know that there's lots of reform that government can do, red tape and regulation, around infrastructure, around skills, around tax. But the truth is that everyone in our economy can do something to be more productive, whether that's as an individual at work, as an individual that votes, or even for businesses can change small things that, if we all do something, can help to lift productivity growth.
Jo Masters, Chief Economist at Barrenjoey, thanks.